Day 3 of the $1,000 account challenge was a green day. We ended the day up 3.24%, up $31.10. I don't know if you can see that right there, but I got $991.58 in the account, which is good because yesterday we started off the second day with a 4% red day, and we got back a little bit of the losses there. And my main focus today, especially after my first two trades, I ended up taking 6 trades today. Most of them were very quick scalps where I got in and got out. My main focus today was if I see profit, if I'm up profit, I want to lock in that profit. So that was really the main hyper focus of the day today. I traded SPY, Tesla, and Palantir, and I'm going to go over each of them in consequential order. And I'm going to explain my thesis, why I took the trade, why I got out of the trade, what I could have done differently, so on and so forth. Let's get into it. So Tesla, I spent a lot of time charting yesterday, and I still think that this is a pretty valid trade thesis, so I'm going to be watching out for it moving forward here. But I wanted to take a short position and a stab at a rejection of this level at about $358 to $360. This has been a major level of resistance for Tesla in the past. You've seen many rejections on the daily time frame, many big rejections on the daily time frame here. And I find it less likely that you just rocket right through this level of resistance up to $390, which to me is the next major level of resistance. And if you really wanted to be nitpicky, I guess you could drop it down and say that there's some good liquidity here at like 377. But I think the path of least resistance is not the move up to 377, but rather setting a higher low to then push up to 377 and then, $390, which I think is the next really big major level of resistance. I guess we can really figure out, what is big here by just drawing a volume profile. You can see that there is a lot of, this is just a big zone where we're trading right now. You can see it, there's a lot of volume soaking up right here between like 330 up to $350, which is where we're sitting right now. So I just don't think it's likely that you come back down here. And there's a nice empty little pocket right here in the volume shelf, which coincides nicely with where I think we would pull back the 618 or so if you draw from the bottom of this little bull flag, which I'm going to do real quick. If I'm going to draw a fib from the bottom of this bull flag to the top of where we are right now, I think the 618 lines up almost perfectly with the top of that little shelf or the bottom of that shelf on the volume profile, as well as the gap right here. 618 is just beneath that gap fill. So I think that's the area that I would target. It would be like a 3 to 4 week trade, which explains why I took the time frame that I did when I traded it. So if we were to go onto the 5-minute chart right here, I entered my position at a little bit past 940. And you can see right here, I bought Tesla 277.5 puts. The expiration was 30 May. I got 2 contracts at a fill of 136. I was playing the breakdown of a rising wedge and risking pre-market high. I changed that risk to a break of downtrend as it developed throughout the day. If we were to look at this, especially on the non-extended hours trading chart right here, you can see a nice rising wedge breakdown. And then off the open, you got a rejection candle, which was setting up on the 15-minute time frame. Just a pretty ugly candle, right? And I wanted to play that. So I did. And the only regret that I have with this trade is that there was a time when I was profitable. Like I was up down here, maybe 15, 16%. But I saw this. I saw this very high volume breakdown candle, and I thought you were going to just sell off extremely hard, but you didn't end up getting that. This 15-minute candle ended up closing as a sweep, and this to me should have been my signal of, hey, I should just take my small profit and get out of this. But what I told myself in that moment was, you got yourself a lot of time so you can see this play out, and my risk reward on this, if I was to draw it out, was not here. I mean, I wanted to see a much lower sell-off. I was risking, if I turn extended hours on real quick, I was risking pre-market highs, which is right here, to make a push down to the 618, which is all the way. Where's my little line that I drew? Maybe this would be easier to see on the 1 hour time frame. All the way down here. So my risk reward was like a 7 to 1, which is why I grabbed, more time on the contracts. And I'm still interested in this trade, but obviously when we broke the downtrend, I just realized it wasn't going to happen today. And I didn't want to sit and wait and lose money while I'm waiting for my thesis to play out, because if I'm early, that's just opportunity that I could be making money doing something else, which is what I actually ended up doing today. I'm glad that I transitioned my plan. But right after this trade, which I ended up selling for a loss, and I'll show you on the 5-minute chart, even though it was a small loss, I got in the contracts at where does it say? 136. I got out of them at 125. So I took a loss of $12 per contract, $24 total. I got out once it broke this uptrend pretty much immediately. And then I immediately flipped to bullish. But before that, I want to talk about my second loss and my last loss for the day, which was SPY puts. Now, this was a very easy trade process and trade thought process. It was just a scalp. I took a 1 DTE contract on this, and I was playing a potential rejection off of this downtrend that's been spanning over the last 3 trading sessions or so. If you were to look at this with extended hours off, this is a little bit easier to see, but I was playing this rejection candle right here off of that downtrend. And I said, all right, I'm risking essentially, let me just draw it out before I go over what ended up happening. I'm risking a break above the downtrend, which is not very high, right? It's not a very large risk here, to then come back down to intraday lows, which is a risk reward of, that's fantastic. 17 to 1, right? If you return extended hours back on, you can even simplify this a little bit more and just say, hey, maybe if we just come back down to intraday lows yesterday, about here, that's still a risk reward of 12. So I'm not even mad that I took this trade. I would take that trade 10 times out of 10, this sort of scalp setup. I got in 1 contract, 1 DTE, 584 puts. Fill was 134. I ended up getting out after this 5-minute candle closed above at 120. And this is why stops are super important, because if I didn't get out, I would have just got fucking dusted the whole day. I would have watched my money absolutely evaporate, and I do not want to do that. I'm not so prideful that I can't get out of the way if I'm wrong. And then this just didn't play out, right? I took an opportunity. The opportunity didn't play. I got out of the way. And today just ended up being a hyper-aggressive bullish day. And if you were to look at this, what this actually ended up being, if I was to draw it for you really easy, not text, drawing tool, was an invalidated head and shoulders. And there is nothing more bullish than an invalidated bearish pattern. There's just not. Once this head and shoulders invalidated, that should have been my sign that I shouldn't have even taken a stab at this, hindsight 2020. But the Bronx Viking on Twitter likes to call this a WTF pattern, a what the fuck pattern, which is a head and shoulders that ends up doing one of these. This is hyper bullish. You just can't beat that kind of look. And that's exactly what we got down here. You got a head and shoulders pattern that ended up coming all the way back up and then just pushing throughout the day. But that was my last loss for the day. And then my last 4 trades were profitable ones. I traded Tesla 3 times, scalps in and out very quickly, and a Palantir put 1 time. But my Tesla trades were long. And the thought process here was very simple. I was looking at the 5-minute chart, and I saw this start to flag after I got out of it, and I thought, hey, this is going to give me a chance to get in long. This isn't just going to squeeze up throughout the day. So I bought a 1 DTE contract, anticipating that I'm going to be in and out quick. This is a scalp type setup, right? I'm okay getting in and out of this in 5 minutes if I have to. That's all right with me. Which it was a little longer than that, but not by a lot. I bought 1 DTE Tesla 357 calls, fill of 119, 1 contract. I was playing the bull flag off of the breakdown of break up of downtrend. It was a scalp setup. And the risk reward on this trade was as follows. If we break beneath the flag and the candle closes underneath it on a 5-minute time frame, then I get out. I was targeting previous day's high, or essentially pre-market high. And it actually just played out perfectly. That was an easy ass trade. It was a risk reward of 6.67. I got out nearly at the top. I know the contracts were up 31%. At one point, I think I got out at 27%. But I got out at 155, and I entered at 119. So, that was a quick, easy 15-minute trade. And right after it got out, I got an exact repeat of the same setup. And this one I didn't execute as well. We got this sort of rejection candle on the 5-minute time frame. I'm going to go over, the trade itself here shortly. But I entered the same calls. I bought them back at 138, playing another flag, targeting, this intraday high. Risk was as follows. So this wasn't as nice of a risk reward, but thankfully I bought the contract and it pretty much immediately started ripping. I was risking breakdown of the flag right here. So it was targeting previous day's high. That's a risk reward. Why is this not? What am I doing wrong? There we go. That was a risk reward of 3. So not quite as nice, but still a nice trade setup. And I played it pretty much exactly right. I got in at 138, out at 149. The only thing is I missed out on all this upside right here. So that was kind of a bummer. It did end up breaking on good volume after that. But I ended up getting a third stab at it anyways. And what I played here was tweezer bottoms off of previous day's support right here, and as well as, pre-market highs acting as sort of a support level that was previously resistance. I played a tweezer bottoms on that. I entered right here at 139. I bought 1 DTE 360 calls, 139 fill. And I got out at pretty much the exact top, man. I saw a wick start to form at what was previous day's support. We got, this little wicking top right here, and I got out at 158. I didn't like the immediate reaction and rejection off of another intraday support from yesterday, so I got out. And I timed it pretty much perfect. In at 139, out of 158, about $19 profit off that trade. And it rejected all the way back down. So you can bet your ass I was really happy that I got out of that position when I did. And that was like a 3 or 4 minute trade. I mean, I was in and out of that so quick. And it did end up pushing up, pretty much to the same point, but then rejected again. So I could have made the exact same money, but just sat in it for another 15 minutes. Whatever. I'm not really that sweaty about it. These 3 trades, I think I executed fucking perfectly. I mean, I could not be more happy with how these played out. This one, I guess, I would have liked to sell up here, but you're never going to time the exact top. You're never going to time the exact bottom. And if you do, you just got lucky. I mean, I just got lucky. I got lucky that I timed the exact top on that. It very easily could have kept ripping and I would have just missed out on the move. But that's not what happened today. Today, I just executed extremely well in this Tesla run-up. I think I juiced that run pretty nicely. And then I transitioned over to Palantir puts. And this was my last play for the day. And this one, I guess, I would have liked to sit in a little bit longer. This one, I'm a little bummed that I didn't make a little more money. I could have played this differently and then made some. But what I was playing was a rejection off of this sort of megaphone expanding wedge type look. Because every time it tapped the top of the wedge, it came back down to the bottom. And I was playing a repeat of that happening. And once we got this rejection candle right here, I got in. I bought 1 DTE, 127 puts at 96 cents, playing rejection off the top of the megaphone, targeting the bottom of the megaphone. And my risk reward on this was as such. I was risking a 5-minute candle close above this little high right here, right at the megaphone pattern. And I was targeting the bottom of the megaphone. So that's a risk reward of 6, which is pretty good, I didn't get the best fill on this. I got it at 96 cents and I got out on this candle at 98 cents. So only $2 profit. I think I was up 10% at one point. So I could have made like $10, $8, $9, something like that. But I think in hindsight now, what I should have done differently was waited to see if we got a stab or a break above this, because this rejection candle right here was not high volume by any means. I mean, relatively speaking, it was higher than this little push down, but this isn't crazy as compared to like this candle, right? Or this bottom right here. I mean, all the volume reads on this are telling me, hey, buyers aren't really stepping in a whole lot to try to defend, these pushes, right? Here, super low volume. Here, super low volume. I mean, nothing crazy is going on here. And it ended up breaking down. And when it did break down, volume kicked up. And I didn't look at the contracts to see what they ran to, but I'd imagine 1 DTE Palantirs, I could have been up 20 to 30%, and that could have been an additional 20, 30 bucks on the day. And so instead of ending $30 green, it could have been $50 green. But nonetheless, I didn't lose money. And that was my biggest priority today, was I do not want to let a green trade turn red, which is why I got it out so fast. I mean, I hate the feeling of I was up 10 or 15% and I closed for a 5 or 6% loss. I don't like that. I don't like that feeling. I don't want to do that. I would much rather consistently make 10 to 15% every single day than try and get my 50, 60, 70, 80% grand slam home run. And you're going to get those setups. I mean, I know for a fact if I keep playing my system, I'm going to get 1 out of every 10 trades or 2 out of every 10 trades. It's going to be a 50, 60%er where every single 5-minute candle is just red, 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 or every single green-minute candle is green, 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 green. And you don't have to think that hard, right? Like if I could catch a move like this, you don't have to think that hard. You can make your quick 60%. But on a move like this where it's choppier, this one I'm beating myself up over a little bit. Like I probably should have sat this out and seen what happened. But I just do not want to see a green trade turn red. And that was my biggest thought process for the day, is do not let a green trade turn red. And Tesla, it happened right off the bat. I mean, that was my first trade. And I went, I am not doing this. If I'm up 10%, I'm making sure that I walk away green on the trade. Above 10% profit, do not walk away red. That was my thought process for the day. Palantir went 10% green, and I said, nope, not walking away red. Do not want to let that happen. So even though I could have made more, it's really not the end of the world to me. I think that I executed pretty well, and I'm extremely happy with how I executed on Tesla today. Now, what could I have done differently? What could I have executed better on? Was my first trade of the day. This should have been a profitable trade. I was up at one point like 15 or 16% on these Tesla puts, and I should have locked in profit the second that I saw this green candle here. But I got a little greedy, man. I mean, I wanted more. I thought of like, hey, this isn't where my risk reward lies. I am targeting way down here. I bought 3 weeks out for a reason. I want to see it play out. But, if I'm going to be up 15, 16% and have my rules, I got to follow them. I can always get a better entry or a re-entry, and I will. I'll take another stab. I mean, I still think that this trade thesis on Tesla is valid, Maybe it's just got to come up a little closer to 359. Maybe you get a couple more green days before my trade is available for me to take. I don't know. I know that I'm still watching it. I know that I'd like to take puts here if there's a nice rejection candle, but we just didn't get it today, and that's okay. Just need to make sure that when I'm green on trades, I am walking away profitable no matter what. No matter what. SPY trade, not mad. I'll take this trade again. I mean, if I get another setup like this, I'm going to take it. I'll take that 10 times out of 10. It just didn't work out because the previous however many times that SPY touched that trend line, it rejected and sold off, and you could have made money. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 times. I mean, every time it rejected. So this is just the one time that it didn't work out. I'm okay with that. That doesn't hurt my feelings that bad. Yeah, I guess that's all I really got to say. It was a pretty well thought out and well constructed day. Took some really good trades, especially my Tesla trades. Very happy with how they ended up working out. It's not a super flashy like 20% green day in the portfolio, but if I can average 3% a day for a week straight, that's a pretty good week. I wouldn't be that mad at that. Is that going to happen? Probably not. I mean, who knows? But I'd rather have more small green wins than small red wins. And as long as I'm taking my profits when they're there, that's going to happen. So I'm going to keep practicing, locking in money when I'm up, and when I'm down, cut my losses quick. That's all I got. We'll see you again tomorrow for the 4th day of the $1,000 account challenge. Y'all take it easy.